Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Cliff Locks.
Welcome to the Private Equity Profits Podcast. I'm Cliff Locks, your host, and with me today is Sasha Grutman, the founder and partner of Middlemarch Partners. Sasha co-leads the firm's merchant banking and investment efforts. He has spent his entire career investing and advising high-growth financial services and business service companies that leverage technology to create sustainable advantages. Tell me how you got started and what led you to private equity.
Well, Cliff, I think everybody comes to business with a kind of DNA, and it's a very important question. What is your business DNA? My business DNA started really with the first job that I took out of college and then business school, which was in strategy consulting. And I worked at the Boston Consulting Group. So I fundamentally am drawn to questions of strategy.
Right.
What is a business about, and how can you create sustainable advantage? And that led me to have a very happy career in strategy consulting, but I wanted more. I wanted to have more of a direct hand in formulating and guiding businesses beyond developing strategy. And so that led me to move into private equity and venture capital. And I think what I bring to it, which is the DNA piece, is that I'm really interested in the strategy. The transaction is a means to something that for me is strategic.
Fantastic. What type of deals are you pursuing? Are there any interesting trends that you have recently identified?
Well, we really focus on two fundamental areas at Middlemarch. We focus on financial services, and we also focus on business services. In financial services, there's been tremendous development over the last 25 years around the, if you will, electronification of or the digitization of financial services. But we've entered into a very interesting new period, and that is this area of decentralized finance using blockchain.
Very good.
We think this is going to radically reshape the role of intermediaries in financial services and change the nature and economics of doing them. So we think that's a very big area that we're investing a lot of time trying to understand and find ways to participate in. Business services, always interested in outsourced business services with a particular focus on technology-enabled services. But a new area for us that we really are excited about is in renewables and recyclables, these ESG-based initiatives that I think can both make money for us as investors and also do good for the planet. And we're active right now in that sector as well.
Very, very good. I sit on the board of directors of a hydrogen company, and then I have another company that uses tokenization, and we're rewarding the user wearing an activity band, meaning wellness and health. We're actually giving them utility tokens, which is similar to like a Bitcoin, but again, you're not going to be able to cash it other than you can use it in Shopify to buy organic food or other activity or health wellness type of devices. And it's all living on the blockchain, and it's HIPAA compliant at that point. So you're living in a very exciting space. And I agree with you, ESG is at forefront at this point with our ultra high wealth network customers at this point. What's the worst investment mistake you've ever made, and what did you learn from it?
But I think when I look back and I try to highlight what's the biggest mistake, it was an interpersonal one. I put together a deal in a financial services company, and I really didn't recognize that the chairman and CEO of the company would have as toxic a relationship as he ultimately developed with the lead investor. I was a co-investor in the deal, but I put the pieces together. And what I discovered soon after the deal documents became final was that these two gentlemen could not see eye to eye. They did not have a shared vision for where to take the company, and they were at odds the whole time. And when I think about investing, it's a lot like arranging a marriage between an investor and an operator. It's often an arrangement between multiple investors and an operator. And if you don't have a shared set of values, a vision for where you want the company to go, and a willingness to collaborate, you often find that you create friction. And in this particular case, we had to execute a divorce. We had to buy out the investor and bring in a new investor. And we lost about 2 years worth of time, which is really the most precious commodity in life, is time. And it really set us back. And I think it's one of those things that as deal professionals, we don't often pay as much attention to. We're looking at the numbers, we're trying to figure out, can we unlock value? But some of that value is interpersonal, and we need to spend more time on that. And that's probably the biggest mistake I've made.
The dynamics of relation building, it really is a marriage. There's no question to it. I'm on another board, it's a health device, and I'm finding a little bit of friction sitting there, and it's painful. They're co-founders.
Like in a marriage, you go into it with a formal ceremony. The ceremony that we deal with is the business plan. That's almost like the marriage ceremony. We said, this is what we're going to do. And we all know that no marriage is like the ceremony, and no investment really runs exactly to the business plan. And so if you don't have an ability to adjust to your partner in real time, you can find yourself in very different places. And I think one of the things we try to do is make sure that our clients and our investors all end up feeling like they have a shared vision of what they're trying to do, so that as we uncover the challenges, we do it together as opposed to in opposition to each other.
So a lot of times I'll bring up the vision of success. Teach me what your vision of success is, define it, let's write it down and see if everybody's on the same page. And then also the timeline when, investments are made, people at some point want to exit. Does that map up at this point in time? So KPIs, the key performance indicators, what are those milestones? Let's agree on this before you write the check. And everybody's aligned where we're headed at this, and we're together. It's collaborative, it's cohesive. Thank you for sharing that. What percentage of the split between portfolio company analysis, operations, and evaluation of new investment opportunities?
You have to remember that Middlemarch is a merchant bank.
Okay.
So we spend about 3/4 of our time as bankers identifying companies that need our assistance in raising capital or executing an M&A transaction.
Excellent.
And we spend about 25% of our time co-investing with lead sponsors in the deals that we bank.
Okay.
And this is part of our strategy, Cliff. We're really focused on leading with investment banking to source advantaged deals and then bringing those deals to our limited partners on a sort of boat basis, an individual deal basis. And you're basically getting an opportunity to invest with people like PIMCO or Waterfall Asset Management or RFE investment partners alongside them through our unique relationship with both our client and the investor who's leading the deal.
It's good. You're writing a check too. Totally vested into these deals that you're putting together at this point.
We really are pursuing, Cliff, a very old style version of banking. It's the merchant banking model, which says we're not only the banker, we're also usually a co-investor. And we do that because, again, my background and my partner's background started off on the buy side. We were both private equity investors in financial services. And we felt there was room, growth equity and buyout landscape for somebody to advise companies, but through the lens of how does an investor think, as opposed to just how does an intermediary think. And we think we bring that to the table and help our clients craft solutions that are more creative, what the investors might be looking for.
I like the word creative.
I think that, again, I want to go back to that DNA question. I think I came to private equity from strategy, which I am always looking at what's possible. I think sometimes investment bankers who ultimately go into private equity start really with the financial analysis. They are much more bound by what they can see in the financial models. That orientation, I think it's always really valuable to have multiple points of view, pushing each other to be both realistic and also see the art of the possible.
Very positive. What are you most proud of in your career to date?
I've given it a lot of thought because, in private equity, I think what I'm most proud of is that I've spent most of my career to develop in conjunction with entrepreneurs who are really making it happen, but help support innovation, finding new ways to do either old things or find new ways to do new things that change the nature of the way we interact with each other. And when I think about financial services, I came of age starting in 1995 when I entered the workforce after business school, we were just beginning to use the internet, at that time called the super information highway, that Al Gore invented. We were using the internet for the first time, and we're using online remote services to introduce home banking and a whole host of other things. And what I would say is it's taken a lot longer for this to happen than I thought. But over the last, I would say 10 years, it's gone a lot faster in this last phase. But it took a long time to get the consumer and the business community to embrace the idea of digital financial services. And I think this has been a huge advantage. It provided cheaper services, more convenient services to both consumers and businesses.
Radical changes in our lifetime.
I would say one thing to you that is hard to accept. Radical change is what our lifetime is about, what's created all the dysfunction. You know, the change is happening so fast that sometimes we can't absorb it, and strange things happen. And I think it's really important to try to stay grounded, to remember what's important to you, and to remember that at the end, our businesses are generally about people, and you've got to look at the people and make sure that they can perform at their best by supporting them with technology as well as, you know, personal support to achieve what they're out to do.
I use the word stakeholders. It's got the executive team, it's got our lines, you know, our divisions, it's got our customers, it's got the community we operate out of at this point. We have vendors, landlords, all the stakeholders, you know, collaborating together to flourish. And I think our investors, they're getting advised at this point. You brought up ESG earlier and where the future looks like. I think with your fine expertise, Sasha, you can help the clients feel comfortable what the future looks like, and we'll pivot as we need to. And we can still be very profitable. And you're in the cutting edge, which is really exciting because yes, banking, we have regulation. So things are going to be a little slower at this point. But you're also looking at the blockchain, and I'm saying, okay, we can't change the blockchain. Diverse, meaning on multiple servers, could be global, and the ability to set up the rules on the transactions on the front end. And it's not going to deviate, it's just set up that way. So the contracts that are written on the blockchain will self-execute based on whatever those parameters are that were set when you put the deal together. And I think it will assist, it will provide validation, validity, it will eliminate some of the malfeasance that could take place, which I think is very, very important. It helps with trust.
I am too, but I would say this, and I've learned this both the hard way and the good way in investment. We've learned from the investments we made, especially at TH Lee Putnam Ventures in electronic capital markets, that the best way in financial services to get new technology adopted is to work with the regulators, not against them. And so I think blockchain and digital and decentralized is going to do far better if it addresses and collaborates with the regulators as opposed to presenting an alternative universe, which the regulators will resist.
Very good.
And I think your point about blockchain providing that immutable accounting ensures the legitimacy of a transaction is true. But we need to convince and bring the regulators along with us so that they support it, because that support is going to be critical for widespread adoption.
You know, I had mentioned a platform that I'm working with, which is, it's the ability to motivate somebody for wellness and to be more active. And it uses a band that sits on your wrist. Let's say it's an Apple Watch.
Yep.
It's using the blockchain, in other words, so the watch is sending the information Bluetooth to the phone. The phone goes to either cellular or Wi-Fi. And then there's an app that the data is going to go to. And I will motivate you by providing you tokens, a chatbot to send you messaging to be more active. So it's looking at the historical data. It's living on the blockchain, HIPAA compliant. It's your data. It's the owner's data. It is. They own the data. So there's a lot of respect for the user. And then you can redeem those tokens for products. In this case, it's organic food and other wellness or activities, or hopefully, you know, gym memberships and things that will help an individual. Now, the SEC, we had a conversation, but it's not Bitcoin. It's a token. It's a utility token. They were looking to learn, and we had 6 SEC regulators on the phone, and it was a privilege to share, here's our vision, here's how it lays out on a whiteboard, and listen to their feedback at this point. And it's a privilege to partner with the SEC, FINRA, you know, CIPC. Same thing, you probably feel similar because they're only trying to do it right. And it's not hard to do it compliantly. And they are partners.
Yeah, I think when you describe working with them, educating them on what you're trying to accomplish, listening to what they need to see you do to address their concerns,
right?
That's a collaboration that we need to have between regulator and regulated.
Yes.
And what I found the hard way is when you try to basically displace the regulator and sort of do it in a sort of so-called Wild West strategy, there's often a counter reaction that's so severe that it really sets you back. So we've learned from our investment experience that understanding regulation and fundamentally embracing it and accommodating it in your business thinking is critical in financial services.
Very, very positive. It's a privilege to collaborate. I do the same thing with the FDA. I teach my, clients, I sit on a few boards of directors. The FDA is a partner. Do no harm. Just follow their rules and regulations. Do it with a smile. Ask for help when you need it. Ask early. And you'll find them to be collaborative, and you'll be able to get the approvals that you need. It's been consistent, a positive relationship. What attributes make a business an ideal leverage buyout candidate?
Buyouts, a little different than growth investing, because what you're looking for is really two things that hopefully complement each other.
Mm-hmm.
One, you're looking for some degree of consistency in performance.
Okay.
You want to have enough baseline performance in a business that you can use leverage appropriately to structure your transaction, because that's a big portion. I mean, remember, Cliff, the world has 25 years ago, private equity and buyouts was a cottage industry. There weren't that many practitioners. They were, if you will, mom and pops. They may have had the name Henry Kravis, Kohlberg and Roberts, but they were mom and pop. They were small business doing these transactions. And over the last 35 years, it's become much more institutionalized and frankly commoditized. It's really hard, especially for the larger buyout transactions, for there to be a lot of alpha left in the transaction when you have the competition between potential bidders and everybody competing. And now you've got the SPACs, which are adding a whole nother dimension to the competition over assets. You need a baseline of performance that allows you to have enough recognition of performance that allows you to put on debt. At the same time, in my opinion, and there are different kinds of buyouts, but the kind that I typically get involved with are ones where either there's a new growth initiative or there's a redesign, restructuring opportunity that allows you to unlock value by doing something different post-transaction than pre. And so what you're really trying to do is pay for the company as it currently looks, and then a lot of value post-transaction to unlock the value that's going to give you your return. And so, if a company is in a boring industry and you have no idea how you could improve it, that doesn't sound like a great transaction for me.
Excellent.
There are people who like lower return buyouts, and all they're really trying to do is buy a decent company and add some leverage and let time deliver a good result, and hopefully it works out. But for me, and the kinds of transactions that attract me are ones where there's something a little bit more fundamental changing. And I'm looking for that, because that to me is what I think is exciting, both for me as an individual, but also for the investors that I tend to be close with. They're looking for opportunities, make significant change to companies to build value in the future.
This is going back to your foundation, to your DNA in your early days.
Right. I like innovation. I was interested in
Mm-hmm.
venture capital before I got interested in growth capital, before I got interested in buyouts. So there's always a desire to see how the world can be different. And I'm attracted to that. And I think there are other people who are really more interested in steady state businesses with appropriate financial engineering can perform really well, but it's not going to be a very different business 5 years from now from where it is today, unless you're doing platform acquisitions to scale things up, to reduce your overheads.
Right.
Those are
roll-ups. All right.
practice strategies for M&A, but it's different when you're doing growth buyout, which is more our focus.
What makes a good private equity deal maker, a fundraiser, a research associate?
Well, I think each one of those is a different set of capabilities, and I'm not going to run through all of them. But I think in private equity, there's three fundamental skill sets that drive success, and they're not always co-present in the same person. Somebody has to be the visionary who identifies potential areas of opportunities, the prospector, can identify a sector, can identify a company that they think has something about it that attracts a good investment thesis.
Excellent.
Somebody has to be able to create the transaction and recognize what it's going to take to be successful with this transaction, post-transaction. So it's a deal maker, but it's also the portfolio manager.
Mm-hmm.
And then there's a third skill, which I actually find the hardest for me, which is the dispassion to be very objective about when to exit and when to cut your losses. That kind of decision, the trader mentality, people with my DNA, which is strategy and kind of operational, is a little harder. But you need that, because investments are like children. And at some point, you have to say to your children, we've done enough parenting. It's time for you to go off to college or have a career. And in investing, I'm selling you and you're going to be off on your own.
Okay.
That decision is hard to make. You're trying to balance how much future growth there is versus how much value you've created already. And that dispassion is very important to establish. So some people are awesome at making the sell decision. Some people are amazing at finding opportunities, and some people are really good at working a deal. It's rare that all three skills are in one.
And you have a great team. That's how it works together collaboratively. Excellent. What's the most important personality trait in finding value where there doesn't appear to be any?
Well, I would say there are a couple of different ways to make that happen. There is the, if I will call it, the blazing insight approach. Somebody who really can see around corners, who sees the future that nobody else can see. It's not that common to have that kind of a skill. There is definitely a persistence drive that helps people. Private equity is a lot like sales. There's a lot of no in private equity. There's no on making the investment. There's no on the deal terms. And there's often no on can we make the changes that we want to see happen. And you have to be both realistic and frankly persistent in driving for change, especially when you're changing things that are, people are resistant to change by nature. So persistence is another big driver. And then the third one, and I hate to reveal it, in what may seem a cynical way, but the older I get, my alpha sometimes is market beta. Timing makes a huge difference in how successful you're going to be. And so sometimes you made the decision around timing based on foresight, and sometimes you just get lucky that the market raises all boats, and a company that you invested in 4 years ago is now worth a ton of money. Not so much because you unlocked so much value, but because the sector got hot, or you have to recognize when that happens and take advantage of it.
I salute you. It's okay to take advantage of it. I mean, at this point, COVID really shook things up. If you own an office building in New York City, it's one thing. If you have a warehouse somewhere else and you're doing 3PL work out of it, it's fabulous. So it's a dynamic, let's just suggest.
Right. And we don't always get it right. I mean, when COVID started, I really thought it was doom and gloom for all of us. I think it was doom and gloom for businesses that needed physical presence. But I agree with you, distribution businesses, not just Amazon, but care services and transportation, have had a boom enthusiasm that I didn't think would be there. So, human nature is generally optimistic, and I'm happy that we were able to maintain it in a very tough period.
Yeah, I agree with you. Describe the culture and the philosophy of your firm.
Well, we're a boutique merchant bank. We have 3 partners, about 8 people in total. So it's an intimate dialogue. We happen to be all male today, although we'd love to see that change. And so an all male firm of 8 people is a firm with a fair degree of conflict. We have differing points of view. We're very assertive with each other about pointing out what we think is possible and what we think isn't possible, and debating. So it's a very strong debate culture in our firm. And I think that's been useful because I have found, having tried to do private equity as a solo practitioner, nobody I know can see all the angles. And so my partners and I really bring different points of view. Through that collaboration, we see more than we would see on our own. I think it's made our work product better. I think we're more capable of anticipating possibilities because we're different people working together and challenging each other's hypotheses, analyses, and convictions. It's a challenging work to do that kind of work, but that's what private equity is about, because the future is not known. You're going to build a future together, and we all come at it with different expectations, different assumptions, and we got to harmonize those.
Very, very positive. What do you think is going to happen to leverage buyouts, M&A, and private equity in the coming months and years?
Well, I hinted a little bit of my cynicism about this topic. I think that money, investment dollars, have become commoditized. There's more dollars available for private equity for all the obvious reasons that it does generally produce an outsized return, but that is making it harder to produce an outsized return. So I think there is more of a need to identify future trends earlier, so you get a bit of a leg in before the market kind of beats the margin out of an opportunity. I think you have to add more value post-transaction, and that's why you're seeing so many private equity firms adding a sort of strategic consulting or operational consulting arm to what they do. I think it's requiring private equity investors to focus more on portfolio companies and less on future new investments, because you have to put more energy into polishing up your investment than you did in the past, where fundamentally, the company could get it all done on its own and you didn't have to spend so much time on it.
Well said. What do you love about what you do, and what do you find most rewarding personally?
As I mentioned earlier, Cliff, I think what satisfies me is helping, because remember, if you're a merchant banker or a private equity investor, you're more a coach or an owner than a player. And this is a really important distinction. Players are the CEOs and operators. They're on the field and they're running the plays. I think as a banker, I think of myself primarily as a coach, trying to get the right resources to support the players. And I think as an investor, I and our institutional investors are more like owners. They're putting their dollars against a team and hoping that team's strategy will play out and they win the championship. Satisfying is helping enable entrepreneurs to fulfill their dreams and aspirations by changing the world that we live in through hopefully a better service, a cheaper service, a richer, a more functionally rich service. And I think that makes me feel good that we've made change. I think today we're pretty excited about some of the work we're doing in recycling and renewables, because I think fundamentally this is an opportunity to do good for the planet, but also to make money. And I think we're focused on a lot of opportunities, certainly in yard waste recycling, which we're very much focused on right now. A buyout that we're doing in the Southeast, a yard waste recycling business that will create compost, organic compost that can be used in place of chemical fertilizer to enrich soil and make things grow more efficiently. There are real opportunities to make money and at the same time contribute to the betterment of society. And that's something we're excited about.
And your clients must be asking for it also.
Yes, but what I found is that sometimes people say one thing as their broad brush statement, and then something else happens when they get to brass tacks. I think ESG and environmentally sound investing practices sound wonderful, but when you get into it, it's a lot harder to do. I'll give you an example. There are lots of things in transportation that are good for the environment, but a lot of transportation is moving oil from one place to another. And so for some people, they're like, I don't want to invest in anything that involves oil because that's not really environmental. And yet realistically, if you can make the transportation of oil a little bit more efficient, you are contributing, but maybe not as much as you would be if you were doing solar power. So people have to kind of make peace with how far on that continuum they want to go. Some people are very doctrinaire and some people are very pragmatic, and you have to figure out what their level is.
What will be your personal legacy, Sasha?
I have two areas, I don't know if I'd call personal legacy, but two things that I aspire to. I'd like to help companies fulfill their dreams and aspirations, to help make a business plan a reality by providing access to the capital and helping articulate that strategy and story to get them the resources they need. And to see businesses flourish, and I can look back and say, I had a small hand in helping that company achieve its potential. But I think on a very personal level, it's the people that I work with, and have I helped them achieve their potential? We thought long and hard this summer about whether we really wanted to have a remote summer analyst. And we made the decision to have one because I want to make sure that young people have an opportunity to consider a career in merchant banking or investment banking or private equity. I want to teach, this is an apprenticeship business. You can't learn it in a book. And so working shoulder to shoulder with younger people, explaining them how we look at businesses and how we evaluate them and what some of the tricks of the trade are, I think is another form of legacy in that they are going to take whatever I have learned that I've been able to share with them and apply it in their business career, which will last far longer than mine.
I'm proud of you. I think that's very, very vibrant, your idea of how you're going to look at your legacy, that we have a fiduciary responsibility to the youth. It's small money. Think about the community of hiring somebody as an apprentice during the summer. It's going to help the firm, plus it's going to help that individual and give you possibly somebody may want to continue to make an offer to join the firm. They really can make a positive contribution.
Yeah, that's our hope. And our hope is also that, this has been a very brutal time for younger people coming out of college because they haven't had the experience in college that they were promised. So a lot of their first jobs are starting virtually. I'm really looking forward to reestablishing to some degree more in-person contact. I don't think there's any substitute for it, notwithstanding this is working pretty well today. But I think at the end of the day, life is about people and how you treat them and how you share your knowledge with them. We've learned a lot over this COVID period about how to do it remotely, but I'm looking forward to getting back to being in person.
Sasha, can I share your contact information with our listeners?
I'd be happy to, sure.
Thank you. Sasha Grutman's email is sgrutman@middlemarchllc.com, which is spelled S Grutman at Middlemarch, that's MARCHLLC.com. And you can reach me by phone at 212-913-9660. Thank you to our listeners. I look forward to being back shortly for another episode of the Private Equity Profits Podcast. The show has been produced by Market Domination, LLC.